Good evening, everybody, and welcome to this edition of Live Market Analysis. My name is Carl Capilingua, as you know, force of habit saying that, but welcome to chat about markets and hopefully an enlightening one for us all. Plenty going on. Let us get to the disclaimer, which says that everything we're going to discuss today is information, has not taken into account your personal financial circumstances, objectives or needs. Before acting upon any of the information in this presentation, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The other important thing to remember is that investing is risky. Markets go up, markets go down. They might not go the way you want them and you could lose money as a result. It's important to remember that it is you and not I who's responsible for everything you choose to do. Apart from that, let's get the requests rolling. I'll analyse any chart you give me. I'll give you my best technical analysis read. It could be stocks, could be bonds, could be indices, could be crypto, anything you're interested in, or anything about trading in general. So the mindset, the money management, and the methodology of it all. I will try and make up for last week's lack of voice in the recording, lack of sound in the recording. Apologies for that. I did have some technical difficulties. I feel that I've sorted them out now. And as you just saw, or as you can see, I have the PowerPoint as well. How about that? So let me catch up on last week. I will do that after I do the quick whip around the grounds, kicking off with the Nasdaq Composite. I put a tweet out, I want to say on Friday last week. It was after that candle formed, the big white one there coming off 15,343. And I asked you, and please respond when I do ask you on Twitter, and I say, excuse me, hey everybody, is this a bullish or bearish candle? Certainly, the market fell on the day. Look, we can see the closing price was here on the day before. It closed at 15,712, and the next day it opened way down and then rallied and still closed beneath that at 15,611. And yet we ended up with this big white candle. And the only way you can get that white candle is, well, there was a bunch of selling at the open, but that selling, it's kind of instantaneous. You're getting this disconnect from the previous day's prices to the next day's prices, but it doesn't necessarily happen at passing through every price point on that journey, and therefore having somebody sitting on the bid at every point through that journey. I'm not saying it's not important, it's still very important, right? We know gaps are important, but what we did see is this adjustment in prices instead of seeing a follow through where there is this big shift in market thinking. That's where the gap is. We did see the demand come in. So the big fear is in a market that is rolling like the one we saw is you gap lower and you keep going. That means on the open, yes, the prices have disconnected, but we instead of seeing that disconnect and no, stuff's still too expensive. There's a disconnect and no, stuff is cheap now, and the demand came in as a result of that. So it's a very different ending to what could have started in a poor way, I guess, and gone into different scenarios. I don't think I explained that very well at all. But the bottom line is we ended up with a white candle and a big one, and it's a bullish candle. So all of the media would have reported Dow, S&P 500, Nasdaq down the day, but we know better. We look at that, we say, no, there's a pile of demand that came in at lower prices. And lo and behold, on Friday, we gapped up. There's the gap again, and again, it's gap up, and no, things aren't expensive. It's gap up, and things are still cheap, and we closed towards a high. And a little bit of an upper shadow. Why is there a shadow there? I think we're seeing the manifestation of supply at the short-term trend ribbon, which is where we kind of expect it to come in, but also, there's a pretty decent area here at 16,046 if we extend across. We're starting to get to a point where there are a bunch of people buying through here. Think of how many people were buying through here. Lots and lots of people were buying through here. And when they get down here, I hate the dash line, buying through here, and when they get down here, they're very sad. They're very sad about this situation. And they wish, beyond all wishing, that the price will rally back up to a point roughly in line with where they got in so that they can break even. And then they will become part of supply, or some of them will. Not all of them will, I can't speak for everybody, but some of them will, and some of that will create potentially an excess supply environment. If there isn't enough demand to soak them up, we'll see black candles, we'll see upper shadows. So that's kind of where I'm looking at this. Where should we be? We have in the past said, taking some risk off the table. I think we might have said last week, correct me if I'm wrong, about a third of our portfolios at risk. Would I move back to, say, a 2/3 situation based upon this double bottom? We're seeing a double bottom, we're seeing rising troughs. Rising troughs means building demand. We're taking out supply because we've taken out the peak in between them, okay? We've got white candles. So this is all good. I don't mind adding some risk back on this, okay? Whether we're going to get all the way to 2/3 in one night tonight, I doubt it, and I don't think that's a sensible idea, but just being more open to the possibility, that's all it is at this stage, that this little correction has run its course. And why shouldn't we be open to that possibility? Because we've seen so many times before when these corrections do interact with the long-term trend ribbon, eventually they do run their course and they keep going up. I'd be surprised, honestly, I'd be surprised if we get away with just what we've seen. You know, if you look at what we saw here, I mean, we could be here. So if we're talking about X marks a spot, we might be somewhere about here. It kind of looks the same, doesn't it? And then we had that little bit of a false dawn, and down we had to test it. Maybe that's what we've still got to go. But I don't mind. I'm not a prognosticator. I don't know if that's going to happen again. All I can say is what I can see, and what I can see is we can add a little bit more risk on based upon the price action and the candles at this stage. Let's have a look at the Russell 2000. Do we see something similar? This is the other key risk on gauge of US stocks. And, you know, I know we do focus on the US. Some people might argue too much so, but I do think the capital, the seed, the genesis of capital movements is still coming from the US. And we're seeing a similar rising troughs here. That's good. We've actually had a really good interaction with the long-term uptrend ribbon and some really good candles from there. You know, white candles pull back, lower shadow. That's what we want to see. White candle on Friday. We're not seeing the rising peaks yet to suggest that we are removing supply at this stage. So supply is still very much in control here, but certainly worth keeping an eye on that, and at the same time becoming somewhat more optimistic. S&P 500 looks fine as well. I haven't updated the ribbons over here, so let me do that now. And we are actually interacting, I would suggest, with that short-term trend ribbon as we speak, and we didn't quite get down to the long-term trend ribbon there, did we? So everything's matching up there, no complaints. Are we looking better in Europe? I don't think we looked as bad, and maybe we're not looking as good either. Just on the French 40 there, the DAX, that looks fine, no complaints there. And remember, we're looking for this coordinated growth, this coordinated coming out of that pullback to make us feel a little bit more safe about adding risk. And that looks very, very good there on the FTSE, but there are some very market-specific things, for example, BHP's bid for Anglo American. Let us head to Asia. I wasn't expecting that. Look, there are some of these charts I only look at once a week. The Hang Seng is one of them, and that's a really strong rally through the last 5 trading sessions, closing above the long-term downtrend ribbon, actually changing that to a neutral stance now. And if we're looking for the DINK, the famous DINK, which is the little pullback there and test and hold of that long-term trend ribbon, it will start to create a new long-term uptrend. The Nikkei, not terrible, not as good in terms of making making a higher trough there than some of the other ones we've seen. In India, they are fine, nothing too bad happened there. And then where I really want to get to is the Chinese market, which I put out a tweet today telling you that by my technical model, which you all know how it works, as far as I'm concerned, this is a new long-term uptrend. And you might say, wait a second, Carl, we don't have the dark green zone. We don't need the dark green zone because I'm calling this on the basis of the price action. And remember, price action is always going to move before long-term trend ribbons. Long-term trend ribbons, which are based on exponential moving average, they're slow to respond. They take time. Sometimes we want that delay so that we don't do anything crazy. But when we overlay price action on our trend ribbons, we get something really special. We get this early warning system, as early as aggressive setups, which we often talk about, where we're using candles to get us entries really early into a potential change of trend. But it's more than enough for me for the price to interact with that long-term uptrend ribbon, for it to make troughs and peaks in there like it has done. It's even better when it just does the one touch like we talked about before and off it goes. But when we see some white candles coming out of that, at some stage you've got to make the judgment call that, yes, that long-term trend ribbon is no longer offering dynamic resistance. And that's the key to this. It is now offering dynamic support or demand, and that's what it is. Michael has raised a hand. I'm not sure why. Hopefully there's no technical difficulties, but Michael, maybe just type what you're interested in the thing in the chat room, and I will see it come up straight away. Okay. And I think this is a very important move. There's the A50 shares, and that actually has today's movement. So you're seeing a bit of a follow through. Yes, there's a bit of supply coming in. It's not going to move all at once, but we are seeing some of those momentum fund managers start to move in here. So I think that's a good thing for Australia. What do you think? Talking about Australia, it was mildly positive today, although it wasn't the resources sector that did the work today. Technology, property, other things were up. We managed to get back most of Friday's gain, but not all. We closed above the balance point of Friday's candle. That's encouraging, but we could have closed much better. Potentially, we're trying to make a second trough here that's higher, obviously, than the 74.92 trough. The 74.92 trough is at the long-term uptrend ribbon. I'll take full credit for that one. Look at that lower shadow. Boop, straight on it, back up again. And we do have some issues, though. So the issues are Friday's big black candle. I'm trying to remember which day it was. It was Friday. That big black candle, I don't like to see them at all. And, it really is, along with Thursdays, have to be careful because Thursday was a public holiday. Wednesday's candle here. So Wednesday and Friday, these two candles here. That is not a good pattern to see when you have broken your short-term trend, especially when it's coming at a point or in a zone, really, where we would expect to see supply manifest itself, and it certainly has. So I don't think we're out of the woods here. I'd love to see some white candles closing very, very close to 7,700, closing in that short-term trend ribbon, telling us it's not a problem, and then really taking out that 77.24 to 77.41. And I think if we can close up there with some white candles, I think we're fine. Alternatively, the drill, if we're below 74.92, all hell's going to break loose. I might keep moving here in the interest of getting to those last week's requests as well. So let us, we'll do base metals while we're here. Stay tuned tomorrow. I'm going to put out an article based upon Citigroup's latest research on base metals, and they've got some calls on copper, aluminium, lead, tin, nickel, zinc, as well as lithium, as well as iron ore as well. And they are saying that they're still very, very bullish on copper. Not that it matters to me, I only care about the chart, I know. But they're saying they're very bullish on copper. Copper's still got some legs in terms of the fundamentals. The other stuff has probably run more on momentum than anything else, and maybe the fundamentals don't justify it, but I better stop talking there. What I will do is put the line chart on and show you that, obviously, a nice rally, but we are pulling back now, and compare that to, say, copper, which didn't pull back at all, and maybe that's starting to reflect some of this fundamental mumbo-jumbo that Citigroup are talking about. Maybe, I don't know. But I want to go to the weekly chart first and just put that in perspective before I do go to copper, and we're going to start with the weekly chart here. Incidentally, Citi have a target of 11.5. That's their sort of, 6 to 12 month target. And then beyond that sort of 18-month target, it's only up to about 12,000 anyway, so they're not predicting, double, triple, exponential move here, but certainly continued strength. And I wanted to also go just quickly to the daily chart to show you that trend is still very much intact. And there's nothing in there that tells me that this move cannot continue. So for the copper bulls out there, you're okay for now. Iron ore, we'll make note of that. We've got a bit of a rally there in this one, which is a different contract to the one we normally look at, which will come when we get to trading view. Nickel is that's turning around for me. I think we have had the interaction with the long-term downtrend ribbon. It's gone amber, and we've had the dink. There's the famous dink above the ribbon. So I would call that very, very early stages of a long-term uptrend. There's a fledgling long-term uptrend in place on nickel, and who would have thought we'd be saying that? It was so bad. Lead, not that you can really play this, but we're looking for synchronized growth in these to tell us there's some expectations of synchronized global growth, which should be good for stocks. Tin is still doing very, very well, but that is a very sharp pullback there, so we don't want to see that roll over if you're in Metals X, for example. And zinc there, this is maybe one for the South 32 shareholders. That actually looks very good. Looks very constructive. That long-term trend has changed as well. While we're here, let's look at lithium carbonate. I did tweet this one today. I called it lithium's big day out. I wasn't expecting the candle that we saw today. I would have given it 0% probability that we were going to see this big white candle on some volume as well. If I saw it on very little volume, I maybe wouldn't be surprised, but some decent volume there. And it's telling you we did remove some supply and some demand came in. There was supply there. We know that the market is well supplied. I mean, we can see that from the chart, but the demand actually took out a bunch of it today. So how does the supply side respond now? Do they come back in at 17,350, 18,850 and throw us some black candles and some upper shadows? In which case this rally is going to fail like the ones before it, and we will break 105,800. I'm sure of it, and we will trend down into the 90s again. Or do we keep printing these white candles and really challenge this notion that this lithium bull market isn't going to take place for another 18 months to 2 years? A lot of investors feel that this big deficit is out there, this looming deficit, and all the evidence, not the evidence, that's the wrong word, all the research I've seen from the big brokers still suggests that. But unanimously, the market feels that there's plenty of supply and dampened demand in the short to medium term. So things never play out in the timeframes that you expect them to. So do we see those white candles 125 and above to tell us we're actually in a new bull market here? I doubt it. I doubt it in my heart of hearts. I can't see it happening, but hey, that's it's not up to me. It's up to the charts. Nothing's happening on the other ones. That's lithium hydroxide, lithium carbonate on the spot market, not doing anything. But we did see a bit of a move up there in the Platts price of spodumene concentrate, 6%. And that's a decent trend there. I mean, what you can't see is all the data. I just don't have the data before that. Because I only started scraping this data a few months ago. So if you do have data for this particular Platts contract before that, let me know and I'll tack it onto mine and get a bigger chart. But it does come down from about 8,000 or something. Okay, so it looks like a bigger rally compared to the other ones, only because it doesn't have the earlier fall in it. While we're here, let's look at gold. Let's look at this. It's spot gold, and then we'll look at the futures. I prefer to look at the futures. This still looks really... I was going to say this still looks terminal to me, and then I thought, no, I better temper that a little bit because it's still a very, very strong trend. But this looks a bit terminal to me. How about that? So if we were to see, and I'll give it a little bit of the benefit of the doubt, if we were to see something like this, if we were to see upper shadows thrown in here, and they might look like, candles that kind of look like, oh, what is going on? These bloody dashed lines. And I made it black, and it didn't do it. Let me get rid of this stuff here. All right, try again. Take two. It's still selected the dash line. So there we go. That's what we want. We see, sort of black candles and upper shadows coming in here, and then I would be quite concerned that that gold has actually done its dash for a while. Not forever, but for a while. So something. Oh, look, that might even be white to get up there, but something like that. And then you see something like this. Don't worry, it'll make sense in a second. And I'm going to leave this here on this chart because we might see how and if that sort of plays out. Something like that would greatly concern me. Silver, let's check that out. And there's a bigger candle there. Hey, the short-term uptrend ribbon is doing its job. It's holding. That's what it's supposed to do. But again, if we're seeing stuff sort of appearing in and around here, and I'm going to move this to exactly where I reckon you're going to see it. And sometimes these things have an uncanny way of playing out, only because I've seen them play out literally about 1 million times before. And something subconscious in the brain says, I reckon that's what's going to happen, and often it does. You don't want to see that. Okay. Let us head to the Trading View screen. And Michael was saying, hey Carl, can you have a look at a few, it looks like ASX stocks? I can. I will have the time, Michael, don't worry. Let us head over here. And over here, that's high-grade copper. So we saw the London Metals Exchange version a little while ago. We said it's going gangbusters. We said there was nothing in that chart to suggest that it can't continue to go up. And good news, I can't see anything in this chart to suggest it can't go up. Now, I can't tell the future, ladies and gentlemen. I wish I could. If I could, I probably wouldn't be sitting here talking to you on Monday nights. I can't tell it. And it could be the biggest, most horrible black candle tomorrow. But the good news is that you'll see it. You'll see it just like me, and you'll be able to make your own mind up as to what that means in terms of demand and supply. But that is hunky-dory at this stage. I said we'd look at the other iron ore chart. That's still okay. I think that's fine. And, there's still a lot of work to do here because we have some really awful price action that we're starting to interact with now. I think the easy part of this rally is out of the way, and it could start to get a bit tougher. Obviously, we're dealing with the long-term downtrend ribbon. There's no surprise why it stopped exactly here, and you can see the upper shadow, the supply manifesting itself, but then coming in the next two trading sessions, demand's trying to... There's a real battle going on here, but it's not far further up that we do have a bunch of buyers that got in that really unceremoniously ended up in some really tough positions, and they would love to take anything above 124 and into 120. I think you'll see a great deal of supply there, but nothing in there to suggest that we can't get there. I think that's fine for now. Uranium, I'm growing more concerned about, and I know uranium stocks had a great day today, but I think you'll agree, uranium stocks, if you've still got them, if you haven't been following my model and haven't been following those many exit signals that you've had, if you've still got them, you probably will know that they're nowhere near their highs. Okay, and this is having some problems here. I always say a V-shaped rally is the best rally. That's the one with the most demand and the least supply, and this is starting to peter out a little bit. And if we close beneath, say, 83, then this is over. And it's just the nature of uranium that it could be over for a very long time. Okay, and all of those bandwagon jumpers will be jumping off the bandwagon, or lamenting their decisions, or still talking their book all the way down. But yeah, uranium, when it breaks a trend, it can continue the next trend for a very long period of time. I'm trying to scare you. I'm just telling you what the price action's doing. Hey, no, I'm not making the price action. Let us head over to crude oil, and we'll flick back. This one's sold me a little bit of a dummy, I think. I thought this breakdown here and this shadow, which is kind of what we're talking about with gold, isn't it, would be the death knell pattern, but it hasn't. It hasn't been the case. In fact, and as I said, I can make a call, and it'll either be a very, very good call, or it'll be a call that will be negated by the market. The market will say, no, Carl, that's not what's going to happen. In fact, we're going to show demand in here. It's still short-term uptrend ribbon stuff, and we're going to reinforce that demand. We're actually not looking too bad. I still think it's very much in the balance. I wouldn't be an oil bull, for example, but I'm certainly not a bear either. And maybe it might be a little bit more of sideways price action. That's just literally what the lower peaks and the rising troughs are telling you. We've found some sort of equilibrium here compared to the phase we had before. So clearly the demand side was in control. I want to have a look at Brent as well, because Brent is kind of the centre of attention at the moment, rather than say West Texas, because the problems are coming in the Middle East, which is the main supplier of Europe more than it is the US. The US is pretty much self-sufficient. And that one looks a bit better, doesn't it? It looks a bit better. So not contradicting what I said to you on crude. This is, not disappointing for me. I don't own any coal stocks, but I was getting excited for people that do. I thought maybe you might have some time in the sun, but we do know what they say about dog's ass. It does find itself in the sun from time to time, but then it looks like it's back in the shade, unfortunately there. So apologies if I got you too excited about the prospects for thermal coal, but I probably should have just respected that long-term trend ribbon, shouldn't I? On the coking coal, let us have a look at the line chart here. And not terrible in that we are seeing a really decent rising trough here, but not out of the woods. So yeah, I wouldn't be a bull on that one either, but not a bear either. Promised I'd look at gold on this chart here, on the futures chart. And we can actually see lots of demand here compared to the spot chart. The spot chart shows far more indecision around this level, but I think gold's actually holding up reasonably well here. I'll give it a C. A solid C for these last few candles. This one maybe takes some of the gloss off it, but it's definitely got a pass there. It's not looking like it's about to collapse anytime soon. Let's go to silver. This one is not getting a C. This one is it's probably more of a D. Maybe I could be generous with this candle, give it a D plus, but it is not a pass. This candle is disturbing here. But today's candle's still live, not too bad. Again, I wouldn't be skewed to the bull case here. I can't see any need for it. I I think the only thing we need to do before we run away is to go to the bond market, where we saw a bit of a pullback. There is a bit of a pullback on Friday. This is the current candle, and we're seeing a bit of a pullback again. At the end of the day, if this goes down, stocks are going to go up. It's as simple as that. But this chart still looks pretty good, isn't it? Why have stocks wobbled over the last 2 or 3 weeks? Because this thing's gone berserk. Okay, and that's the big problem there. I want to have a quick look at the 30s, because this is what US mortgage rates are linked to. I think they're up around about 7% at the moment, so there'll be this plus a spread. But that's certainly going to cause some pain. Bringing it back home to Australia here, we saw a similar rise. In fact, market pricing now factoring out our first interest rate cut until, I think it's August next year. It's something crazy. And the Federal Reserve, I think we're about, was it September or October? I can't recall. I did write about it on the first cut there. Japanese 10s are still edging higher. So we'd like to see those come down as well. For the people who are interested in Bitcoin, let me do that one quickly for you. It's not looking great. I'm a bit disappointed. I could certainly see a reason to have some position. I think it's a 1/3 type of position, which means you're 2/3 out. Okay, where could we add back a third? If it starts to print some white candles, probably above there, 60. Let's call it 67,700. Close above. I think you can add some more risk, and then maybe you might be a couple of white candles. But if you don't see it, it might be a 72.9 for the fabled next leg up to 100. Wouldn't that be nice? Where are you going to cut out? It's pretty simple. Probably cutting out beneath that, or making a trade where you sort of, I'm just going to cut it now and just put my buy back here, and all I'm going to cost myself is that much. That's all I'm going to miss out on. But if it tanks, I'm out. You're literally selling here and straight away putting the buy order back there. The worst case scenario is you sell here, it tips you in here, and it collapses anyway. Nothing's foolproof, and knowing Bitcoin, it probably will. That's the whip around the grounds. Let's head over to your requests from last week. I can see your requests coming through for this week, so please be patient. We will get to everybody's today, I promise. I'm going to change the screen, and I'm going to head over here and head over to, actually I'm going to head over here where I do more drawings. And I'm going to kick off with Adrian's request. Now, Adrian last week had EBR, and I'm going to go through these briefly. And what did I draw? I drew some price action that didn't turn out, but I don't think I was prophesizing. I think I would have been saying, be careful, if you see this, then you've got problems. It hasn't turned out to be the case, which is good news. Okay, let me get rid of that, and let's do some new analysis for today. I think the price action is very good, and let's go back to that day there, which is 19. So what would it have been? It would have been 22. So that's the day. That's the day we were looking at it there, and the price action was fine on that day. Okay, trend was good, long-term uptrend, hunky-dory. And I would have said something like, "Oh, this is not a great candle, but it's not enough to change the thesis yet," which is full risk position, and it's still full risk position today. Looking sort of a bit further out to see where we might run into some problems, and certainly this is an area here which we are dealing with or have dealt with. I'm going to say we've dealt with. I think that's past tense. The next area is not until up here. That gives you plenty of room. Then you might see something, really anything up there and above. But I think this is just fine. There's nothing in there to suggest we need to do anything but continue to run a full risk position, much like I would have, or I did probably say last week, we're watching for price action that would change this thesis to something that kind of looks like that, and then we would be taking some action on candles in and around these two peaks, or a close beneath the middle trough, but we don't have that yet. Let us go to the next one, which is BET, not VET. It's going to be BET. And what did I draw last week? We would have been on that candle there that's highlighted. I think I was saying, can we make one-to-one reward to risk? And I think we did make one-to-one reward to risk, but yeah, it doesn't look like that would have been a good trade so far. Today's candle has pulled back and trying to bounce off the short-term trend ribbon. We're trying to see if that long-term trend ribbon is going to offer us dynamic demand. We've seen some of it today, certainly manifested some of that in the lower shadow. If I had it, I'm a bit frustrated and annoyed. We don't know the future. We can't say that last week was going to be the last white candle since, but it has been a tough week, I guess, in many respects for many stocks. Not to say that that is enough to give this one the benefit of the doubt. Look, if I don't think there's enough in it just yet. I mean, this is a nasty candle. Let me get rid of these. So I want to see this candle. See, this is a nothing candle. This isn't bad, and then you had to stay. Like, there's nothing you could have done about that. So I'd go to say, all things considered, it's just hanging in there at full risk position, but the grip on that is growing extremely tenuous. I think another black candle that closed on its low, just about anywhere around today's close would be enough to manage risk on this. Obviously, white candles, we're desperate for them here, and we're going to need those to keep us in this trade at a full risk position. Yeah, this is a little bit sketchy here. Now, I'm guessing there might have been some news. It looks like a news kind of event here for it to go from 14.5 to 10.5 and then back up to 12. I don't know, but it is kind of holding, some of these areas as well. Previous points of supply that are acting as potential demand here. Okay, so there's some good stuff going for it, but it's really starting to be balanced now by some of the bad stuff we're seeing. So to summarise, still at a full risk position. I'm concerned that if we do get another black candle close, it's going to come out. The supply is going to come out from here, and that's where I've been managing my risk. You might want to go a little bit more aggressively than 1/3, I think, if you saw something like that. Let's go to SXE. And I wish they were all easy like this. I wish I could say, hey, nothing to do here. Let's keep moving. That last chart was hard to analyse. Okay. If it sounds like, Carl's really trying to figure this one out. Carl is really trying to figure this one out. Carl's not trying to figure this one out. There's nothing to do here. Full risk position and move on, because there's absolutely nothing in this chart to suggest to me that the demand side isn't in total control. Okay. The demand side is in total control here. And that's what the candles, the price action and the trends are telling me. So that one's an easy one. Let's go to PCG, which I'm doing a double take here because I copied and pasted Adrian's requests over, and I'm not sure if this is the right one. All right. Because much like the last one, SXE was a picture of total demand side control. This looks like a picture of total supply side control here. So as far as how much risk I would have on this position, it is a zero risk position. Okay, zero risk position. I don't think you can short this one, so that's a moot point. And I can see why you might be thinking, oh, look, there's some white candles popping in. Maybe there's an opportunity here for an aggressive entry. There's not enough happening here. There's not enough other stuff to back it up. And absolutely, you could look at this candle here, and you could say, yep, that's a full white candle. We're talking about a total of 9,295 shares, which is pathetic and irrelevant, okay? So you can't really do candlestick analysis when you're getting fewer than 10,000 shares and fewer than 10,000, therefore, dollars traded on a day. So all we can go on really here are the trends, and the trends are still very much set to the downside. So it's a zero risk position for me. I don't know if I had the right one, or you mistyped it, or I've mistyped it, but it says PCG. Let's go to PRI, unless maybe these are US ones, which is also a possibility, and I just haven't figured that out. So don't know if I still have the screen going. I do. I'm going to investigate this just for my own curiosity here. Just give me 1 second. Because if I keep going, I'm going to keep making the same mistake, and we'll be looking at irrelevant ASX shares, and that would be a waste of everybody's time. It doesn't say. It says PCG FRI DIM. Okay, so just for future reference, you really do need to tell me, if you're going to send me an email, make sure you tell me they're ASX or they're USA. Okay, just even if it's BHP, for crying out loud, okay, or it's Commonwealth Bank, just put, hey Carl, they're on the ASX. Okay, maybe Adrian's asking about this one. I don't know. You get where I'm going? And I'm not going to waste my time doing analysis on this because it might not be the right one. I will, just for shits and giggles, type in PRI because if it's in a nice trend, it might make more sense. And then I'll do DIM because none of these are ringing bells for me on the ASX, if you get where I'm going. So PRI, there isn't a PRI and then a DIM. So I don't know. None of those struck me as trends that I would ordinarily get from you. So I'm confused there. Sorry, Adrian, if I screwed that up for you. But next time, it'll be a little bit more clearer. LYC, this one is for Rebecca. And I'm really interested in following this up because the brokers, as I do these, I have to read all these broker research notes to do the broker consensus each day. And I actually do enjoy reading them because I kind of see how the other part of the market thinks. And it's funny, these brokers. So many of them have buys on Lynas, right? They're just sticking with those, sticking with that thesis, but they keep downgrading their price targets, right? So they had buys on them from here when it was going up, you know what I mean? So we had a buy, and we look clever, we look clever. We don't look so clever, but we don't want to admit we're wrong, so we're going to keep a buy on it. But they had price targets up here, and then progressively they're cutting their price targets and maintaining a buy. So that's what we saw. We saw them cut their price targets but maintain buys. That's the fundamental side of things. Where's the technical side of things? Hasn't changed a whole lot from last week. I would have said something along the lines of beware the long-term trend ribbon because it's been extremely good at telling you where rallies terminate. This one did also terminate for all intents and purposes, has terminated there, but we've seen a really good rally today off a place where we should see a rally, the short-term uptrend ribbon, and it's a nice candle and it's a good close. And I think it's one of the few times we've seen a really good white candle close in the long-term downtrend ribbon when that ribbon's been tested. So I think this is as good a possibility, this one, to be the one that succeeds. But I'm not going to call this a turnaround play. I don't think it is just yet. I want to see a little bit more. And the reason why I'm less inclined to go for this as a turnaround play than maybe something else, which is in a turnaround setup, is I can just see the proximity of supply zones so close that even if I try and be a hero here and get in on that candle, and look, I wouldn't argue. Look at me in the eyes here. You can buy this candle, right? You can do whatever you want. You might want to buy that candle because you think Lynas is the best company ever, right? Like all the brokers do. And you're going to just put a little bit of risk on it. Okay, you could bet the house on this. You're going to put a bit of risk on it on the basis that you can see a short-term uptrend. You can see that the price action is back to high peaks and high troughs, which indicates demand reinforcement and supply removal. This is the fourth test of the long-term downtrend ribbon. We're seeing a nice white candle close in it, and it's a good push off the short-term uptrend ribbon, just offering dynamic support. There's some good stuff going on here. Actually, we've seen an influx in volume through this last rally to actually tell us we've got some supply removal. So I can see why you would do this, but I think you're starting off with a smaller bit of risk, and then on the next white candle, maybe adding some, and then the next white candle, adding some again. Probably that's it for a while, because you don't want to be adding too close to these supply zones. And when you get up there, you're probably going to have your stops trials at break even, and then who cares what happens up there? You might give it a go and try and see if the price gets through them, or you might take half off the table and then see if you can get through with the other half. Okay, but as long as you can say, look, I've checked 5 boxes, whatever your minimum needs to be. I know what mine is, right? I know what I like to see. And it's not as much of a rigid system as it was even just 5 years ago. It's more now understanding that really the methodology is the least important part of the equation. I used to have checklists upon checklists upon checklists, literal checklists of stuff I had to check before I got in. And I would find I'd end up checking the boxes on what should have been the best trades, and I'd miss all the bloody good ones. Like the ones I checked all the boxes on, they went nowhere. And then all the ones I didn't bloody check all the boxes on, they went through the roof. So you can see the evolution of my strategy into, just get some money on it. Just put some money on it, some money that you're not going to lose any sleep over, and just see how it goes, assuming you can build a case for it. It can't be like that PCG we saw, which was just rubbish. We can build a case, we can make a case around it. And if we're just putting a little bit of risk on, if it turns out that this long-term trend reasserts itself and we go, what was I thinking? The bloody long-term trend, I knew it, right? We've only lost a little bit, okay? That's my new thinking on trading. And it feels better for me, and I think it's appealing to a lot of you out there as well. So I don't mind this. Will I go so far as to say it's a turnaround play, add some risk? I don't think I'm quite there yet for me, but I can see why you might do it. Okay, let's go to WHC, which I'm going to guess isn't going so well because we saw that thermal coal chart coming off, didn't we? And we can see actually a really nasty reversal pattern here. Maybe it was there last week. I don't know. Where's the 22nd? Let's have a look. Look, it was there. It was forming. So I would have said something like, this is not good. I'm surprised I didn't write minus 1/3 straight away because I really should have. That's a really nasty 2-candle pattern. And then I think, well, that's a little lower shadow, but still, I think if you're full risk position after that candle, I think you're really kidding yourself. And certainly that one there, I think you're running less than a full risk position here. I think you've still got some skin in the game, but I just can't see why, given the evidence, it would be a full risk position. Okay, and then I just see it close beneath there. Maybe did on that day. It's gone back up, and if we got out a third down there, you're probably saying, well, geez, that's not where I should have got out, but that's okay. You're just having rules and you're following through. Okay, you might have got out a little earlier. If it goes back up, it goes back up. You've still got some skin in the game. You can always add back. But those 4 black candles, you have to say, if I got out after 4 black candles, I got out for good reason. I got out for very good reason. I didn't know there was going to be a white candle the next day because I can't see the future. I didn't know the market was going to recover. The broader market is having a couple of days up, for example. You know what I mean? Don't beat yourself up about those things. Just keep saying, I took some off the table because I saw 4 black candles. Because I guarantee if you continue to do that, when you see, say, 4 black candles in a row, more often than not, it's going to be the right thing to do. I can't see why you would have a full risk position on this. I think 2/3 at most for me. And then where would the next third come out? Well, I'd probably just drag that down a little bit beneath this white candle now. And that would be your next third. Okay, so close next third on a close beneath that, because that's an important point now. This is in fact a trough. If we close beneath that, we'll have turned the price action. We've already got lower troughs, but we'll also be lower peaks and lower troughs if we get down there. Okay, so that one is far from being in the clear. Let us go to Zip. This is a very popular one. Interesting candle today, a good candle today. We're forming a higher trough, actually. It's lower than where I would have liked it to happen. I mean, ideally, we don't want to see it get beneath the short-term uptrend ribbon, and it got beneath it with a really nasty candle. If I had it, I could see a reason for holding, say, a third, but I don't think I'm any more than that. It would have to throw in some really nice white candles to pull me back into any more than a third. I think this is going to be a bit of an issue, the top of that shadow and that one there. That's your supply zone. Okay, so it might be a case of a few higher peaks to drag me back into it. I know lots of people had a really good trade on this, and maybe they're thinking, look, I want to relive past glories. Where do I get back in? But I think it's going to take a bit of work for that to occur for me. And I totally concede, maybe today's the day. But I don't think the evidence is strong enough to warrant more than, say, a third left on this trade. No more than a third for me. That's me. Okay, let's... I'm just trying to read. This has come from Rebecca. Zip was charging up as a great turnaround play. It was. But I noticed it started selling off as it touched the underside of the long-term weekly trend line. Okay. I should try and answer the question. So here we go. Weekly trend line. It did touch that, yes. Is this a coincidence, or can weekly charts be used to improve our understanding of how turnaround plays may behave? That's a very interesting question. I must admit, I haven't thought of it in terms of taking a trade on the daily chart and then looking at where the weekly long-term trend ribbon kicks in. Okay, I haven't thought of that. Okay, what I typically do if I enter on a daily chart, all I look at is the daily chart. Okay, if I enter on the weekly chart, all I look at is the weekly chart. I think if you start to mix and match the two, we're getting into confusion zone. Okay, because what are we really holding ourselves to? It's easy to make excuses and find reasons to do stuff that probably don't matter. I think if you've entered on the daily chart, you're a much shorter term trader, and you're going to be looking for the signals on the daily chart, which are going to be naturally short term. If you enter on the weekly chart, the same is true for weekly candles, which are 5 times longer term by default. It could be just a coincidence that it kind of got to that long-term downtrend ribbon and started to come off. I don't know. I can't say. So, yeah, I think maybe you're reading a little bit too much into it, Rebecca. That's what I think. I should also address some of these other things. I do not know how to interpret black candles which rise above white candles. I find them very confusing, especially this Friday candle. Now, this was in Whitehaven. Let's have a quick look at that, because there could be some learnings in this for everyone else. So we're looking at Friday's candle, and because this was given to me last week, I reckon it might be that one there, because that was a Friday. So black candles which rise above white candles. So black candle here, which rose above white candles. So the only way you can get that is if you've opened up, so you've gapped higher, right? You've gapped higher. Then we continued to rally. So I'm guessing there was some news on that day. And people got very excited. And then other people said, oh, fantastic. I've been waiting to sell for a while, and the market is flush with demand. Isn't that wonderful? So I can sell at really a good price, and I can get all my supply out today. And I think somebody took that opportunity. And that's the way I want you to think about, as you call them, Rebecca, black candles which rise above white candles. That's pretty much what's happening there, especially the ones that have the long upper shadows. That's even worse. It is basically supply lying in wait, and especially if you have big volume. If you have big volume, lots of demand came in, lots of supply met that demand. And what that does is it creates a massive overhang of latent supply, because you've got a bunch of people now caught at the top of that trend. Probably a lot of Johnny-come-latelys, probably refusing to buy. You know the feeling, oh, I knew I should have bought it at 7. Why didn't I buy it at 7? Oh, I knew I should have bought it at 7.10. I'll just wait for the pullback. I'll wait for the pullback to 7. I knew I should have bought it at 7. Now it's at 7.10. I'll wait for it to pull back to 7. Oh, I knew I should have just got in yesterday. Why didn't I get in yesterday? Oh, look, if it just pulls back to yesterday, I'll get in. Oh, no, I should have got in. And then, that good news comes out, and I can't take it anymore. I have to get in. And boom, they've just bought at the top. Now, I know nobody here has done that. I know nobody here knows anything about what I'm talking about, right? Because it's never happened to you. But it does happen to some other really unlucky people out there. And think about how they feel after they're in. It's like, oh, shit, I bought at the top again. Like, every time I buy, that's the top. It's like, the market is waiting for me to do something. And as soon as I do it, it's not true. The market is not waiting for you to get in to make the price go down. It's pure coincidence, I assure you. But it will happen. It will happen. And we have to move on from that. But anyway, there's a huge amount of latent supply just going now. What are they saying now? They're saying, oh, please God, if you just let Whitehaven Coal go back up to 810, I promise I'll get out and I will never trade Whitehaven Coal again, please. Just let it go up. Latent supply. They're really bearish candles when you see them. Black candles rising above the white candles, as you call it, long upper shadows. And Lynas was, I should say, do the last 3 candles count as the dink? I might have addressed that last week, and there was no dink there. And we still don't have a dink yet. That is all your stuff done, Rebecca. Stuart wants ADT. Don't worry, I'm going to get to everybody's tonight. And I think this looks fine. Stuart's told me in his email, he said such and such broker upgraded it. Then this broker did that, changed the price. There was some sort of announcement. Stuart, I don't care. I really, really don't. But what I can tell you, Stuart, is that there's plenty of demand out there for this stock, and supply for the most part. They want to hang on and they want to see where this can go. I think it can get to $5. I'm not sure what it will do after $5, But I think this has every chance, given the trends. The price action could be better. It's very overlapping, isn't it? Which does indicate some indecision in the market. It can often indicate a company that has a lot of scrip out there, a lot of paper. I don't know if that's the case here. It's just a guess from me. But the candles are good, and I think the logical place to go now is for that supply to want to come out at $5, and for people to probably buy until we get to pretty close to there. So pretty happy with that. What would I do with this if I had it? Do nothing more but run a full risk position and not have one share less than that. If I didn't have it, could I add to it? I don't think the price action is good enough for me. I'd like to see cleaner price action. So what does cleaner price action look like? It looks like the last troughs coming in at or above the second from last peaks. And we've talked about this many times. If we are at point A, for example, and we look back, okay, this is our last trough, and we want it to be at our second from last peak, okay? And by definition, that's where it'll be, because that will be our last peak, okay? And this is what we call good price action, and anything less than that is bad price action. This indicates very little indecision in the market. That's what it's about. We are seeing that old points of demand are acting as new points of supply. We're seeing that the demand, which is anticipating that, okay, so the demand that is like you and me, we're anticipating this is going to be demand here. They're coming in before we get there. And that's why that last trough is at or above the second from last peak. Okay, if we're seeing this, which is what we are seeing, okay, this is not good price action. Does it? Look, it's not as good, is it? It's still going up. It's still high peaks and high troughs. So that's still good, but there's far more indecision here. We should be seeing demand here, yet we penetrate so far into that zone that we're really wondering if demand is actually there, or if they are there, why are they taking so long to come back in when they should be there? I shouldn't call it bad price action. I should call it not as good, not as good price action, because bad price action would be not rising peaks and not rising troughs. Let us go to Peter, who's asking for ENR. I must get your the current webinar going up here, just in case I have thrown a technical issue. And going to go here, and looking good, no complaints. Today's candle showed the manifestation of some supply at a major point of supply, okay? But I think it closed really well, considering how many traders probably were queuing up to get out at this level. I think the demand side held up really well. I think they put on a great showing, and I'm fine with that. There's absolutely no reason why I wouldn't run a full risk position on this. Would I get in here? I'm not sure if I'm a buyer if I'm not in, because let me just see a white candle print. Let me just see a close above that major point of supply. Look, I'm not far away. The other thing, of course, is, it is more of a turnaround play, so we've probably got some problems here, and we've probably got some problems here. You need to make the reward to risk work, and the last trough is so far away, so is the short-term uptrend ribbon. So it's more of one that if you're not in it, maybe you've missed this until you get another little dink. Because if you get a little dink, what that does is, look at this. What that does is if you can, say, get in on a white candle in here, for example, let's say we see a nice white candle in there, and it's going to become a white candle in a second, because I'm going to do this, and now it's a white candle. What does it do? If by just waiting for that dink, what it does is it takes this stop level up to here, okay, and now our reward to risk can work. Okay, so sometimes you have to say, look, I've missed this one. I'm going to be patient. I'm just going to wait for another trough, another high trough to come in. Demand's still there, nice white candle, and it just gives me a better place to set a stop loss, because I'm not going to get in up there with a stop loss down here. It's just like if it gets down there, something's gone really wrong, and way more wrong than I could let it. So I think that's the way you've got to approach some of these, where I go, well, that's a long way from the like green zone. Let's go to A1M, which is a copper stock, so no doubt going gangbusters. I've drawn areas where we probably should have seen some supply. We haven't really seen that. I mean, some intraday supply, if anything, at this one. And then a little bit here, maybe manifesting today. But I'm going to go ditto on the last one. Hey, if you are lucky enough to have this, I still think you can run full risk position. I think there's no harm in letting a few go, though, especially up here. And I think even if you saw any sort of upper shadows or black candles, I think you're close enough to let a bit go, okay? And no more than a third, and you're still 2/3. If it keeps going up and blasts through 56, happy days. You might even get a dink before that, right, to add back some risk. But yeah, look, up to you, somewhere between a full risk position and or if you see the black candles coming in anywhere around here, upper shadows into 52, 53, then a third off the table. But otherwise, it looks glorious. Let's head over to James, who's asking about RAC, which is Race Oncology. I can't remember if I looked at it last week, which would have been right on that day there. So I just want to see what I might have said. Well, I don't think I would have had anything good to say about it because the supply side is very much in control, as at the candle I've highlighted there. We've seen a little bit of demand coming back in the last two candles. So this one here and this one here. Not a great deal at this stage. I mean, look at the magnitude. Yes, there's some lower shadows there. Yes, it's coming in at a really appropriate place for it to come in around that long-term uptrend ribbon. But look at how bad those black candles were. So we want to see some white candles of the magnitude of something like that or something like that. Or I mean that's obviously good enough. But you know, these two here sort of starting to work their way in here, and then I think you're starting to be able to feel that you're out of the woods. That there's a reason here to remain invested, because until I see those, I can't see a great deal of reason to be invested apart from the fact that we're kind of, seeing some demand coming in at the long-term uptrend ribbon, kind of. But these are horrible candles. These are candles that are telling you the market is really convinced about what they need to do with this, and that is not be in it. Okay, so all is not lost, but not far away from it. I think if we're trading sort of down here with a big black candle on a low candle close, I think we've got some real problems. Let us keep moving. BCB, no redeeming features here. Do we have an aggressive setup? We are seeing a base pattern, so that's good. That's a good sign. A base pattern means it's stopped going down, okay? But we're still seeing a well-established short-term downtrend. I liked even my aggressive setups. We're still seeing the short-term uptrend ribbon has turned. Okay, so we're not buying right at the bottom. Even then, we're still seeing some evidence that the demand side is coming back in, and they are overwhelming the supply side, at least in the short term. We're still seeing at least some high peaks and high troughs, and some good price action in that the last trough is at or above the second from last peak. We're seeing a predominance again of white candles. This is good. I mean, we have seen some volume here at the low to indicate that we've seen a blow off. We've seen that last bit of supply that had to come to the market and being soaked up. That's not bad, but there's not enough here for an aggressive setup. And therefore, for me, still at this stage, happy to stand corrected by the market. And this is a zero risk position proposition for me. SRG, this one is for Brendan. This is not a zero risk proposition at all. This is a FRP, full risk position. If I had it, I'd be hanging on to every share that I had, and I'd be very happy that I was, because this looks absolutely fantastic to me. No complaints. We've got to go a long way, don't we, to get anything which resembles a point of supply, and even then, I'm not too fussed about that at all. I think we're fine here. Could I add some risk to this? Let me just see what's happening up there. I don't see why not. Ideally, I would jump in the time machine and add it on that candle there, which is a very obvious place to add risk as well. Even on that candle there is a nice place to add risk. But hey, all I'm saying is by that is you're a little bit further away from the light green zone than I'd like you to be. But otherwise, yes, I could still add risk to this, assuming it's the best thing I'm going to find today. But let's keep moving on that journey to find that best thing today. Maybe we'll find it on Roscoe's next one, which is LRS. I'm not sure if this is the best thing today, but it is definitely not the worst. we are seeing some signs of a nice turnaround play building here, I think. We're seeing rising peaks and troughs. They're very overlapping, but we are seeing a predominance of white candles there. I think that is very clear. We haven't seen a lot of volume on this last push. I'd like to see maybe a little bit more on the next couple of candles, just to tell me that we've cleared through that supply. There's going to be supply there, and the only way to get rid of them is to trade with them, and that's going to create volume. Nice high candle close. I'm going to say in and around anywhere near that point of supply, and yeah, I actually could add some risk on this as a turnaround play, but I think I could go plus 1/3. But I'd be comparing it against the universe of opportunity, because there is a bit of a level there. And, do I want to fight with that level? Look, I can say with confidence, even if I can't get to the point where, well, this is obviously a plus 1/3 turnaround play. If I can't get to that point, at least I can say, if you had it, you'd definitely hold on to it. That's what I think. I would if I had it. You need to do what you need to do. Let us go to A1M. Actually, we've done that one. Let's go to Boss Energy, an interesting one, because this is fading. I think this is fading. I think it's been fading for quite some time. I think if you are following my model, then you know that that is a species-ending event. I think even if you only got out a third on that day, that would be where you got out your second third. And I think on that day, you are all out of Boss Energy. And if you are still owning Boss Energy, you have not followed my trading model. Now, putting that aside, if you still have it, what would you be doing with it now? I can see a reason to holding it. I think you've got a pretty low risk position here in terms of where your stop is. Like, it's pretty obvious. Your stop's under there, and if the price closes beneath there, you have you've exited your last remaining position. And in the absence of that, you're clear to see what you can get out of it. Today's candle is very, very good. Very good. I mean, from yesterday's close to today's high close, volume wasn't that impressive, but that's okay as well. We're not interacting with supply just yet, but we're not far away from it. Okay. Nice big white candles will keep this going. I'm not at a point yet where I'd be adding risk to this just on the basis of that one candle, but certainly if I saw some more evidence, so the short-term downtrend ribbon acting as a point of demand, some white candles in here, then I could consider it. Okay, but we're still a little bit of a ways away from that. But what we've seen so far is very encouraging. And even if it doesn't turn out to be encouraging, that's not the end of the world, because we've got a clear place to manage our risk, at the very least. Okay, let's go to JMS, which is fine. This one is manganese. If I'm not mistaken, I'm pretty sure it's manganese, and they are benefiting because South 32, which has the biggest manganese mine in the world, again, don't quote me, these are all fundamentals, has had to close that mine for a while, and then these guys have a big manganese deposit, and they're benefiting from that. So good luck to them, and good luck to you if you've got it, because all I can see here is full risk position. In theory, today we should have manifested some supply, which is a little bit, but nothing at all to be concerned about. This is fine. I would think, maybe round here or maybe round here, just knocking out a third. You don't even have to see the candle. Just knock out a third somewhere there, whatever candle you get. And then if you get a bad candle, knock out another third. Okay, and if you get another bad candle again, knock out another third. Or at the most, you might retain a third, but I don't think you need to have much more than that, to be honest. I think it's one of those that will, it's a flash in the pan, but it's flashing, and good luck to it while it does. That is all of the Aussie stocks from last week and this week, and I'm going to get to all of the live ones, the live requests today. So live requests, thanks for being so patient. And how are we going for time? Not terrible. Not terrible. I think we're okay. Let's go to A2 Milk, which is a little bit like Zip. It's a little bit like some of the tougher ones you've made me analyse today, because it's not clear cut, is it? We are seeing some good stuff coming back in. Okay, so this is all good here. This stuff is good, and was it? It was a recent one. It was Boss Energy. It was Boss Energy, and it was. I said it needed to do exactly what we're seeing here. I said it needed to get above its short-term trend ribbon and need to throw in, say, a white candle there, or we could see a lower shadow. Okay, and then that's when we could consider getting into it. And this is kind of what this has done, but I don't think it's covered itself in glory here, has it? I don't think there's enough evidence based upon the candles we have seen. I'm going to delete the lines so we can see these candles and just really focus on what these candles are telling us. And I'm looking at this little shadow here. I'm looking at this shadow here, and I'm looking at today's shadow as well. Okay, and I think we're encountering a bit of supply around here. What do you reckon? Okay, and that supply zone is lower than this supply zone. Okay, we don't want to see those supply zones building on each other. Okay, because that's not good. But there's nothing in there to suggest that we would need to manage our risk any more than we already have. Okay, that's not a great candle. That's probably kept you in it. That's probably kept you in it. But that, I think, is a minus 1/3, and that one is there as well. Okay, that's probably another minus 1/3. That one's not, because you managed to get enough of a shadow to just hang in there. And then I think you're at most kind of a 1/3 position on this. Okay, if you've got 2/3, I can understand. I can't see any reason why you'd still have 3/3 though. Okay, I can't see why you'd have a full risk position. So what I'm going to say on this one is I can run a plus 1/3 sort of position on this one, but no more than that. I'd be concerned if we closed. I'm going to go say beneath here. So I'm just taking this candle's high, this candle's low, and the short-term trend ribbon, and anything beneath there, I think we're going to manage our risk, and that my last third would be out beneath there. As for adding more risk to this, I just can't see why we need to. I just don't know why we would be talking about this particular one in those terms, because we are struggling here. We're struggling with the momentum of this uptrend. It looks, if anything, like a trend that is potentially in the process of changing. And that's what trends do. Well, look at this. Does this area here look similar to what's happening now? Okay, let's keep moving. That one was for Colin. Nice background poster, says Sudesh. If you didn't see what the background poster was because you turned up late, this is my studio apartment here, and that was the poster on the wall. Keep calm and follow the trend. Let us go back to Amy Broker, and we're going to go to we'll do the US and Canadian stocks in a second. From Robert, what do you think of FFM? I think FFM is amazing, Robert. Look at that. Last candle here, and I think I gave you some levels here. If it closed beneath a certain level, maybe minus the third. Let's go to the 22nd, so I can see what I might have seen last week. And I'm really fretting that it's closed beneath one of those levels. So 22 here. Yeah, I doubt you might have. Well, if you saw that on an end of day basis and you came out to do it the next day, you might have had a cause. Oh, look, it's opened up a bit. I'll hang on and see where I could go. And hopefully that was the case. I really hope that was the case, because it ended up being an amazing white candle. The copper rallied on that day, and then obviously rallied on Friday as well. So look, right now it looks amazing. I can't fault it. Even if you did sell a third there, you've still got 2/3. So that's okay, and that's going to happen to you from time to time. I think the next target is up to 95. I can't see any reason at all why you can't get there, so I can't see why you'd sell an extra share from here until we at least saw what the candles did there, how the candles manifested themselves. If we see white candles, lower shadows around that level, we're going to the next level. If we see black candles, upper shadows there, maybe it's worth taking some risk off the table. But until then, it looks great. Would I add risk to this if I didn't have it? I think you're chasing it a little bit, given where the next level is. But I don't mind. It might be just paring back maybe to half of a third, so like a sixth there instead, just on the basis that, ideally you're already on this one in terms of reward to risk basis. But no, I think that's a very, very strong candle, if not the best candle we've seen for today so far. Let us go to JMS, which we've done actually. That's fine. Mesoblast, which has surprised me. Today's candle is a monster. if you have it, you'd be running a full risk position here, unquestionably. FRP. If I didn't have it, could I add risk there? I'm a long way from the light green zone, but I still think that that's such a strong showing of demand. The only, look, in a vacuum, if this was bottom left, top right, and there was no history on this chart, I would say absolutely yes, still adding risk to this, but it's not. It's not the case. I've got this up here. I think is there one-to-one? Only if you're prepared to say, I'm going to really be active there at managing my risk. If it goes wrong, it's 50-50, isn't it? But as far as the setup goes, I can't fault the demand side showing there, demand side in total control. It's not about the setup on this one. It's just about can I make one-to-one? I mean, am I comfortable? And if I can't, am I comfortable going into a trade where I stand to make less than what I stand to lose? Am I comfortable with that? Hey, I'm not you. You decide if you're comfortable with that. Let us go to FND, which is coming up regularly on this. Oh, look, it's had a bit of a pullback. And yeah, I think, minus 1/3 there. I can't see any reason why you wouldn't have, okay? These candles aren't great, and I reckon you've gone minus 1/3. Well, let's go 22nd. Maybe I called it last week. I would have. So we would have said minus 1/3 straight away, which means, or maybe, I don't know, what I can't remember what I would have said. Maybe you would have gone 1/3 there, which meant that this was a second third, which means all you have left is 1/3. I can't remember, I'm sorry. What I can say is that 100%, that's now your level. So let me get rid of some of the redundant ones. I'm going to move, we don't need those. I'm going to copy and paste. I don't even know what that is now. Let me put that down here and say close less than 230, 229. Change those around. That is a minus 1/3. And the question now becomes, we've accounted for 1/3, 2/3, and the final third. Is there a reason to add risk back to this? I'm very close to saying yes. I am concerned about the magnitude of supply that was exhibited here, and I'm concerned that it will manifest itself quite strongly. I reckon around here, I reckon there's a high probability you'll see a lower peak put in here with black candles and upper shadows. But don't get me wrong, this is a strong showing today. This candle here, so the combination of that candle, the three very quiet inside candles, and today's it's a very strong 5-candle pattern. Look, for me, no, I'm going to go past. I'm going to try and find something that looks as strong in terms of the candles, but has better price action and doesn't have all of these big black candles to worry about, not too far up. Okay, so no, I'm going to go, no, I can't add risk back to this, but I could happily hold the third I had and see if I can get a better price to get out of that third. That's the way I would play this one. Hey, if I hadn't sold any of them, I'm going happy days. I'm still on, but I'm going to be very, very attentive to what happens in that red box. And I don't think you want to miss that chance to get out if you missed it last time. Okay. Let's go see where people are going. They're taking liberties with the number of stocks they're putting in, but that's okay. I like this one. This is, look, it's not a turnaround setup in that we haven't seen the long-term trend ribbon contract enough to be orange. This is more an aggressive setup. And we've often talked about aggressive setups kind of down here, which is where we tend to see them. And this one actually looks good for an aggressive setup, even around there, even there. Even this candle here, I know it's close to the long-term trend ribbon. I'll address that in a second, okay? But what we are seeing the volume, okay? So we're seeing the volume come in. We're seeing the sideways price action, but we're not really seeing clean up high peaks and high troughs, are we? It's just, it's very sketchy. So I think that's probably creating a bit of an issue there. So it's not the ideal one, but it's better than some of the ones we've seen. What I prefer to see is, this sort of price action at the very least. We haven't seen that. We didn't see it down here, but we are seeing it now. Okay, so let me just go back a step and explain what the hell it is I was trying to explain to you. Okay, I was trying to explain to you whether there was an aggressive setup here. Okay, and I've said no, there isn't, because we didn't see the right price action. Yes, we saw good volume. Yes, we saw at least a sideways pattern. We didn't see the right price action. We probably didn't see enough white candles. Okay, but fast forward to now, and we are seeing the right price action. Okay, we are seeing the right candles. Okay, the only problem is we're in the long-term downtrend ribbon. Okay, that probably rules that one out. Okay, but we made a great fist of it today. We closed on the high, smack bang on the high. We've got some decent volume today telling me there's some supply removal. And I don't think we're afraid of this ribbon. Okay, and that's what today's candle's telling me. So this is an aggressive setup. It's not a turnaround setup yet. Okay, I said that at the start. So on the basis that this is an aggressive setup, I could add risk to it. Okay, but I'm probably going to go, I might not do my usual 1/3, I might only do a 1/6 and see how it goes. Okay, I'll leave it up to you how much you do. That's how I would trade this one. So this is an official aggressive setup now. We are in the trend ribbon and we're not worried about it. Okay, contrast this from the one where we are beneath the trend ribbon and we are still worried about it. Okay, so what I'm trying, maybe it's a little bit subtle. Okay, maybe it's clear as day, but I'm telling you the difference between this candle as an aggressive setup and this candle as an aggressive setup. I think this candle is really aggressive because of the magnitude of this long-term trend ribbon. And look, we even tested it on this day and this day, and it started to manifest supply, didn't it? Even this day is manifesting supply. Today, where's the supply? You tell me. Are we concerned about the supply in this zone anymore? We're not. And that's the difference between this day and this day as an aggressive setup. And then we had all the other aggressive setup characteristics. What I'm trying to give you here is a template, okay, a case study that you can use to say, this is a picture which means something. And I need to find these pictures elsewhere. Okay, that's why I've spent more time on this one. Cyprium Metals, I wouldn't have a clue what they do, nor do I care. VEE, this is Veem, if I'm not mistaken. There's something to do with a ship stabilisation system. That's my guess. I think that's a great chart. I can't fault it. It's amazing. $2 round number, we've dealt with it. We were there, we had some issues there, but today's candle's telling us we're dealt with it. It's not a problem anymore. Happy holder, full risk position, and if I didn't have it, I could consider adding some risk to it. I don't think I'm going to see anything out there. I'm not, so no issues at all. That's the best chart I've seen today. It's not very liquid. Today's huge volume was on 500,000 shares, right? So $1 million worth of stock traded is not a lot. Michael saying thank you. I'm not sure what for, Michael, but you're welcome. Perry's got some Aussie stocks. Okay, well, they must be going very well. A1M, we have talked about that one, and LRS for an aggressive setup. Yeah, the question is whether this is aggressive or whether this is turnaround. I think I might have labelled it as a turnaround more than an aggressive, but I think we're kind of splitting hairs there. I don't mind it. Let me just see how it interacts at that point of supply. I think there are better ones out there, though, if we're looking for aggressive setups. We just saw that last one, CYM. Let us go to Adonis AD8 or Audinate. Okay, we might have to implement a rule where maybe we ask only 3, because Adonis has, well, I guess he's got 4 Aussies and 4 US. Okay, maybe we can just do 3. That's not the one that Adonis wants. AD8, not sure what happened there. There we go. Look, plenty of reasons to get out of this. I won't draw all the arrows as to where your minus 1/3 are, but I think you agree. Okay, not drawing them. There's plenty in there. Okay. Is there a need to be adding risk back to this one now that it's pulling back and seems to be kind of bouncing off the long-term uptrend ribbon? No, I don't think the candles are strong enough to warrant that at this stage. Okay. Let me see something that looks like this. The price action interacting, trading above the short-term trend ribbon with the right candles, and I could contemplate it, but I think it's way too early to do any more analysis than that on that one. MAQ looks fine. If I had it, I can't see any reason why you wouldn't have a full risk position. This is a little bit of a scary candle here, and certainly if it was reinforced sort of around here, So in that sort of zone, we saw something reinforcing that candle, I'd be more concerned. Okay, but until then, I think we're fine. You've got a little trough there, which you can use as a manage a risk point. I don't know if I want to be in all the way down to there. I think we could find some candles to get us out before then. But we're talking the worst case scenario when we probably don't need to, because I think that looks fine from here. Let us go to SXE, which we actually have done. Full risk position, no complaints, looks magic. And then LOV, which I think is having some problems here. We talked about A2 Milk and how it was potentially losing that battle, and they don't always lose the battle all at once. Sometimes it's a process. I think the process has started here. Today's candle is excellent, though. If I had it, I would hold on to it. I'm not contradicting myself. I still think this is in part the very early stages of turning around. But if you have it, today's candle is excellent. I think you can hold on to it and see what you can get out of it. But also at the same time, be very, very cautious at what happens in here. Don't want to see this area fail again. Okay, don't want to see this become an area of building supply. And there's no reason why it will, because I can't see the future. Today's candle is great. Did I mention that? Today's candle is great. Okay, and we are also seeing rising peaks and rising troughs. Yes, we are. So that's good. Short-term trend room potentially holding. I just don't like the slip through here, and I'm pretty sure that wasn't a dividend. If it is, let me know. I don't think it is, but I don't like that slip. It means that maybe we're changing trend. Hey, that's still good. Like I said, if I hadn't taken any steps up to this stage, then I would be still FRP on this one if I hadn't. And just watching very carefully what happens up here. If I don't have Lovisa, would I be looking to buy it? No, I don't think so. I don't think there's enough evidence from what I can see yet. Let me see how the candles work out here. Black candles, upper shadows, confirming my suspicions. Just a suspicion at this stage. White candles, lower shadows. Hey, what was I worrying about? I shouldn't have been worried at all. In that case, I could look at it as a buy, but it's not that far away. I'm not giving up much either in terms of price to feel better about it, to feel more confident about it. Let us go to deep breath. I'm getting there. They're all US ones. SSM. Don't type in any more in. I probably should have mentioned that a long time ago. Let us go to Service Stream. Is this a subject of a takeover? I don't know. Maybe I'm confusing with something else. I think it's fine. I think it's a bit slow and steady. Like, it's going to be quite boring, I think. But yeah, look, there's no obvious candles. You can see there's no obvious candles or price action to suggest that you wouldn't run a full risk position at this stage. I think you can work out some logical areas beneath which you might start to manage your risk, through there or through there. But there's nothing in it to suggest that we need to do anything but continue to hold. Would I buy this? No, it looks a bit boring. Let's go to ENR, which I think we did, didn't we? We've done this one. Full risk position, waiting for a dink. Next white candle, we could add some. We've done SRG, I know that for sure. MMI. I would have said, if you got the high close today, it was absolutely magic. Today's candle is not ideal. I still think you're running a full risk position on this if you have it, but there's no reason, there's no rush to run out and buy it if you don't. The candle's not good enough. There's some supply in the market lurking up there. Or why? Why is the supply there, everybody? Why is this? Well, it's 5 cents, isn't it? So if you're a stock that's trading 1, 2, 3 cents, 5 cents means something, all right? It'll mean something for a little while. Once you get above it, then 10 cents is going to be way more meaningful. But yeah, I think you probably saw a bit of supply up there for no reason. But somebody who bought it at 4 is getting it at 5, or somebody who bought it at 2.5 is getting it at 5. But it's fine. As I said, FRP. That's why I typed FRP. It's fine. I just wouldn't buy any more of it at this stage. That's just me. Can we look at BRE? Brazilian Rare Earths. Not enough history there for me to do much analysis on it. It is clearly a very new stock. The candles aren't great at the moment, but as long as the short-term trend holds, we're probably okay. I don't know if you'd say, close beneath there. I don't think it's tough because there's just not much price action. So what's the relevance if there's very little history at particular levels, then what are the relevance of those levels? Certainly beneath there, you've got some issues. You might go beneath the short-term trend ribbon as well. So let me just, in the interest of having some levels, sort of a close below might be a third there, and certainly a close below would be a third there. Would I buy this? No, I can't buy this because the candles, the last two candles, are far from ideal. If I had it, I could hold it. There's a reasonable trend there. Let's go to CAT. We've got some problems here. So this trend is turning. If you're following my model, you are definitely not running a full risk position here because you have taken some action beneath there. That would have been your minus 1/3. I don't think there's much reason to do it before that, to be fair. And you're still 2/3 in. And then we're just looking for a close beneath here is your next third. And you might get a candle before that. So that might end up being your final third. But if it's not, then that would be second. And, you're just kind of stepping out of this. The trend is changing. It's far from ideal. And it's a little bit concerning there. Would I buy this? No. There's no reason to buy this. Let us go to IPX, which is doing nothing. It's certainly not a full risk position here. I think we can see why we might be a minus third there. There's probably another minus third there. I'm very close to a zero risk position on this one. I'm not sure what that meant. Full black close beneath that level. Well, that's kind of it. There's minus 2/3, isn't it? It's pretty close. I'm going to say at the most you've got a third here, but I'm really kind of feeling on this one it's a ZRP. So I'm going to write ZRP. That's my gut feel. There's enough evidence in there to suggest, especially with this upper shadow, that the trend is changing, and therefore there's no reason to hold risk. At most, you've got a third, which by definition, by implication, what's the right word? There's no reason to add risk here. I wouldn't be looking to buy this one. Let's go to, we've done FND, we've done FFM. Let's go to NEM. Big gap there. They had a quarterly report. BHP's taking over Anglo. These guys have some copper. Maybe BHP might be interested. No, I don't think they would, unless BHP said, look, let me just buy your copper assets. And that might be something you might be interested in if they got the right price for it and just become a pure gold play. I don't know. But it's so far-fetched that would be a price driver at this stage. So, we've got a re-rating. I guess it's a gap. Or maybe I'm overthinking it. Just work on the fact it's a gap. If I had it, I'm a full risk position. Those last two candles are absolutely no reason to do anything but run a full risk position. I wouldn't be selling share of this if I had it. Would I be buying it here? Look, I don't mind. I'd go, yeah, I could go next white candle. If I put aside the fact of why this might have happened and just focus on the price action, next white candle, I could add some risk to this. But I'm not sure if people are asking me if they should add risk to this. I reckon people are on it. I think that's why the question is here. It's not, should I? Well, I don't think the question here is should I buy this for the first time? I know I'm guessing, but I think people are saying, I've either got it, what should I do with it? Or I've got it and maybe should I add to it? I think something like that, we could go plus another third quite happily there. Okay. Let's go to thought on NEM. It would be better to see the chart in the USA, not much on the ASX. Okay, well maybe we'll look at it there when we get there. This is from Chris. Chris wants another gold stock EVN. Looks fine, no complaints. There's nothing has occurred to do anything but full risk position. Even on this pullback today, that's a down day, but it closed well off its lows. So this is full risk position and hasn't given you any reason since we last spoke about it to do anything but. Could I add risk to this? Yes, I could. I can't see any reason why you can't add risk to this. Short-term uptrend, good candles. We've tested, pushed. We've done everything we had to do at this old point of supply, which dispensed with, and now we're moving back up again. So happily to go plus 1/3 on that one. Let us go to PCG.ASX, confirmed from Adrian, and I looked at it, I analysed it, and I said zero risk position on that. but I couldn't find your other ones, which was DIM. I couldn't find that one, and I couldn't find. Let me tell you what they were. PRI and DID. Maybe it's here. Let me check in the other list, the master list. I still can't find it there. And PRI. I can't find that one either. That's all the time I can give you on that one. Let's go PMV. I think the trend is turning, but isn't today's candle amazing? And I've said, how many times have I said that? I think the trend is turning, but I think today's candle is amazing. It's a function of the high flyers into that market top have been taken down a peg, haven't they? But they're showing their quality. They're showing the quality now that they had before that market correction. And it makes it really difficult because this is a sign of a top. This is a topping formation. More often than not, this is going to be the top for a long time. But did I mention today's candle looks good? Okay, not as good as some of the other ones we've seen. Okay, because we're not making high peaks yet. We haven't had that supply removal, but we do have high troughs, and it's a high candle close, and we're back above the short-term uptrend ribbon. Look, if you didn't exit anything here, and I think you should have got at least a third out up there. Okay, this candle's a third, and then that candle there is a third. Okay, and then maybe even here's your final third. Somewhere in here and here's your final third. Okay, so it's hard for me to say, oh, I'd have a full risk position on this. No, I wouldn't. But I think if you've got it, you would still hang on to it. That's the way I'm going to tackle this one. If you've got it, I'd hang on to it, and I'd be, I don't think I'd be holding it beneath there. Okay, would I buy this now? No, I'm too scared of what might happen up here, and that's consistent with some of these other ones I've seen. NEM gapped up due to its quarterly. That is true. Okay, that's the bottom of the list. I'm heading back up the top. Watch me go. We are going to the trading view screen, and we are going to do, I'm already there. We're going to head back up, and we're going to do, first of all, from Matthew, MOD. I hope this is this is not an Aussie one. Yeah, it is. It's a US one. It looks great. No complaints. Very strong. And, we know stocks in general have had a tough time, so this one is coming back very well. If I had it, I would 100% hold it. If I didn't have it, I reckon with a higher close, I could have done it, but there's just a little bit of supply here. Yeah, a nice white candle close, close to $100, and I reckon you could add a third to this one if you didn't have it. You can add a third if you did have it, but if you do have it, then I think it's still a full risk position from here. Let us go to third attempt at $100, says Michael, and it's a good, it's an important observation in that. So it's Matthew, sorry, that yes, it takes time to get through the selling at that round number, the supply there. So you can have a few attempts, and then that third one, that fourth one, could be successful, or it's more likely to be successful. Let us go to VRT. And let me get my default zoom going again. Yeah, look, no complaints. It's in the shadow of 100. That's probably worth noting as well. If you're getting in here, just understand that you should treat that as a point of supply. But if you had it, I've got no reasons not to run a full risk position here at this stage. I mean, that candle's a bit scary, but in itself, not enough to be a minus third. And then that candle came back fine. And then Friday's candle is fine again. So yeah, happy holder, but I'm not sure if I'm buying into this one. Let me find one with a nice big white candle high close. Let's go to Perry's US stocks now. PR, try that again, PRMW. Primo Water Corporation, love it. And a very nice chart. Let me just flick out to the weekly, see if I've got anything that I need to worry about out there. There is a bit of a level, not far away. Look, and it's at a bit of a round number. It's not the first time we've been to the round number, so I don't think it's going to be a surprise that we're there. But it has been an important point in the past, hasn't it? $20, And I think there's every chance it's going to get back there this time. The question is, well, what does it do? What happens when we get there? And even now, look, it's very strong. Don't get me wrong. Price action candles are almost exclusively white, but you know the last few are showing a little bit of a tiniest bit of loss of momentum. Fatigue's not the right word. That'd be too strong a word. Look, I think it's fine. If I had it, I would hold it. I'm just mindful of what's going on up there, and that might prevent me from buying it if I didn't have it, or adding risk if I did have it, compared to just holding what I do have, if you get what I mean. So happy to hold what I've got. Not sure if I want to add any more just on that big point of supply. And if I don't have it, let me try and find something that looks just as good on the price action of the candles and the trends, but maybe doesn't have that big point of supply, not too far away. But maybe I'm being a bit nitpicky there. VCTR is the next one. Victory Capital Holdings. And this looks amazing, yeah. So this is very, very clean. We're through the round number. That's even better. And I'm betting this is all blue sky from here. And it is. Look, it's had a good run, no doubt. Both on the weekly chart, a long way from the light green zone. And look, but it's okay. I still think you want to have some risk on this. If you feel that, oh, this is really in nosebleed territory here, Carl. I think get some risk on it, but just have a little bit, just enough so that, you know, it'll show you that, yeah, look, these don't always crash when I buy them. It looks like it's gone up a long way. I feel that if I buy it now, it's going to crash, right? But I'm going to buy some anyway, just to prove to myself that it's not about me, okay? And you couldn't get a stronger setup than that to do it on. NN. You look, ditto, yeah, I think we're going to go ditto on this one. Very strong last candle. More of a turnaround play, so not a blue sky like the last one, but the points of supply, we're through that one. We've got a bit of a round number at 10. It's not the first time we've been there, so it won't be the be-all and end-all. And then there's no problems. The next level's up at 15. So yes for me, no complaints. Look, if you're getting into it here, you're getting into it eyes wide open. I'm 50 cents away from $10. Okay. JAN, Janoni. This looks magic. That's a really, really nice chart. $100 says that it's not a blue sky trade. There's a little bit of a level here, but that's, you know, it's a long time ago as well. And then the next one's miles away. And I'm just looking at these troughs and this level here. Okay, the old point of demand acting as a point of supply going forward. But that weekly chart is absolutely magic, by the way. And yeah, it's just immensely strong. This is the strongest setup I've seen. Putting aside any risk-reward parameters, this is the strongest setup I've seen today. Thank you, Perry. Excellent as always. Let's go to Adonis's US stocks, TRIN. Don't put any more in, obviously, because it's ridiculously late, and I won't see them anyway, because I'm not going to see anything on the bottom of this list. Okay, I'm heading up the list now. We're going to go to TRN, which is Trinity Capital. And we are looking good there, Adonis. No complaints at all. Lovely base pattern. Nice, big, wide base pattern off which to then to use as a foundation for its next move up. Where could the next move up take us? So let's check on the weekly chart. And, you know, you can see that base pattern building here. It's not all that far away, sort of 1640. But above that, you've got a bit of room. So maybe that might come into play. Well, I've gone to monthly chart. Didn't mean to do that. Let me go back to daily. We're not quite there yet, though, are we? We've still got a little bit of a ways to go. So, look, a lot of good stuff going on here. I'm not sure this is the strongest setup out there. Plenty of black candles in and around there to tell me that, you know what, there are some fund managers that are targeting those higher levels to supply. So let me see. Look, let me see how it gets, what candles I get around 1540, and then, you know, some white candles there. You'd have the confidence that we are through this level, okay? And then I'll leave it to you to check your reward to risk. But otherwise, then it would be a yes for me on that basis. Let us go to ARIS, which is Aris Water Solutions. No complaints here. Not fussed by that shadow. That's ultimately a good candle as well. It came back into the range, holding the short-term option ribbon. Great candles off that. The price action could be better in that this trough is below the second from last peak, but it's not a terrible chart at all. And it's more of a turnaround play. I'm not sure if you're picking these Adonis as to where you might have problems in the past. Just click on that weekly, and that might just alert you to some of the reward to risk issues, potential issues there. But otherwise, that weekly chart looks great. Don't get me wrong; that is a really, really strong-looking weekly chart. It's a very strong-looking daily chart. Look, I've got no complaints. We're seeing some strong candles here into that point of supply. So yeah, I'm happy. Plus 1/3 on that one. But then look at this as well. Don't just look at these setups in isolation. Look at them through the lens of the other setups that we've seen tonight. Let's go to PTNG. Portugal natural gas imports. I might not even have. I might not have. I'm guessing that's not what. I'm guessing that's not what we're looking for. Let me try that again. It definitely says PTNG here, and we might not have. Maybe we've got the wrong code there, Adonis. So maybe we'll do that next week. I can't do it this week. I've got to keep moving. I'm going to do HOOD, HOOD, which is Robinhood Markets, the stockbroker. Yes, we know that one. That happens to be a monthly chart. Let me head back to the daily chart. No complaints here. It's trying to hold this short-term uptrend ribbon. It's like many we saw in Australia, like Premier Investments, for example. Stocks that were booming before the market correction. They have pulled back with the market, and now they're trying to come back again. And the question is, do we give them the benefit of the doubt, or do we treat them with some skepticism? I think there's enough other setups where we don't have that concern to maybe go with those ones. But if this is the one we really love for whatever reason, great candle on Friday night. We are back into higher peaks and higher troughs. So ticking that box, they're trying to hold the short-term uptrend ribbon. The long-term uptrend ribbon is still very much in place. I've no complaints. If you wanted to add some risk to this one, no complaints at all, because I think even if we're doing it for the first time, that point of supply up there at 20, you can see why 20 is the problem. We can get 1-to-1 there as more of a turnaround setup to mix up our setups. I don't mind it. Let us go to, they're all Aussie ones, and I'm back to the top of the list, and then I just have to do these offline ones for Craig and Jason, and we're done for the day. NVDA, it won't be this long next week because I won't have to double up due to the technical difficulties. Nvidia, I called the top. I patted myself on the back, and Nvidia, in true Nvidia fashion, look at those last few candles there. What an amazing turnaround, and just absolute power. It's just shock and awe, isn't it? After this candle here, which is where I patted myself on the back. I mean, that is as bearish as you could get as well. To then just go, no, don't care. All right. Has caught a bunch of shorts off guard, and we could see a further short squeeze in here that could easily take it back into those highs. I wouldn't be short this. I've never, what's the right word? Promoted is not the right word. I've never implied that we would short this. It was more just of an exit, getting out of longs, because that can be so dangerous like that. But this is, again, the pullback, the invincible stock, market correction. But boy, have we seen over the last 4 or so trading sessions some really strong comebacks on those strong stocks. The weak stocks are still weak, but the strong stocks are absolutely punching above their weight, aren't they? Could I buy Nvidia right now? I'm not averse actually to adding a little bit of cheeky risk on this one, if only to see the shorts put to the sword as it passes back through 950. Okay, so let me say, if you had exited your Nvidia, I don't think you're too fussed. If you had got out, I mean, to be fair, it was that day there. I said, do not pass go, do not collect $200 unless you've got $200 in the stock. That means you're selling it and getting out and collecting your $200. They were literally my words. And you're getting in here and you missed out on all of this rubbish. I think you're pretty happy with that outcome. I'm going to go add risk on Nvidia. I'm adding some risk back into this because I want to see what happens to those shorts. Could you imagine those smarty pants shorts who said it was overvalued all the way up, had their little, what did I say about the dog's ass in the sunshine every now and then? Those shorts having their sunshine, and that sunshine has been violently taken away from them. And now they're wondering, holy hell, if this thing gets going again, I'm in big trouble. That will be interesting. A cheeky ad risk on that one. CRS is the next one. Carpenter Technology. Magic, Jason, great looking chart. Let me just get my default zoom going. It's looking even better there. And let me go weekly chart, result up, and we've got no troubles at all. This is up there with the best setup I've seen today. I accidentally clicked on monthly. I didn't mean to do that, but that's cool because there's nothing on there that suggests that I shouldn't very obviously add risk to this one. And if I had it, obviously, I'm running a full risk position. Thank you, Jason. We're going to go to JAN. For the people that are struggling to stay awake, we've got 3 to go after this one. But I reckon they're going to be worth your while because Jason has picked some great setups in the US, and this is certainly one of them. And it looks like Perry had this one as well. I think, did he? I'm going to scrolling down now. I can't find it, but I thought Perry had this one. JAN. There we go. Okay, great minds think alike. And the reason why this jumped out at me was, I was about to say, I'm pretty sure I said this was the best setup I've seen today. So Perry's got the best setup I've seen today. Jason's got the best setup I've seen today. And I'm going to give Jason the honour of having the second best setup I've seen today, although Perry had a couple that were very close. LFMD, which sounds like one of those acronyms, isn't it, that young kids use these days when they send messages on Snapchat. LFMD. What, laugh? I don't know what the rest of the letters would mean, but the F might not be a good one to speculate on. But LifeMD, might even sneak in as third best setup for today because that looks amazing. And we're going to go to there, and it's even looking better for me on the weekly chart. I'm loving that as a turnaround play on the weekly chart. In fact, it's actually double green, it's continuation. The only issue I have is here, but that's miles away. I'm not worried about it, and therefore, yeah, I think this is comfortably into third best setup I've seen today. I'd happily add risk to all 3 of those trades. And let's go to Zeta, second last, and maybe displacing the last one as third best setup of the day, or just that issue there, you know. It doesn't look like anybody's worried about it though. I think you're okay. So just on the basis of the strength of the daily chart setup, look, absolutely yes for me. No qualms about that at all. And then I'm seeing VCTR, which is one that Perry had as well. So just reiterating there that great minds do think alike. Well done, boys. That is a ripper as well. And it's when I talked about this, I said it's one of those you have to compel yourself to add risk to, even if you do bloody well make it the top. Even if you're the one that anoints the top on that one, I still think you need to do it. Okay, that's it for me today. Wow. I don't know about you, but I'm exhausted. Let us read the disclaimer very quickly. The content of this presentation, it was just information. Do with it what you think is appropriate. And if you're not sure what's appropriate, seek the help of a financial professional. That's very important. Trading is risky. You could lose money. You could lose it very quickly. Look at NVIDIA. Imagine you were short that thing. I reckon those shorts might be losing a bit of money quickly. But the point of that is that it's your decision as to what you do. It's always you that's responsible for your money, not me. Apart from that, it's been a pleasure chatting with you this evening. Hopefully you enjoyed it. Again, apologies for the length of this session. It won't happen again, but hopefully we won't have any issues on the technology side of things. Let me remind you, just in case you forget, keep calm and follow the trend. That's it for me. Bye-bye. All the best for your trading. Until we catch up again.